Welcome to part 12 of our SPY call option strategy research we've been doing. Let's walk through what we have so far just to kind of recap everyone in case you didn't see the entire series. You can find the entire series in the card that I'll put up here on the video, or you can go to the channel playlist as well. But basically what we've been looking at is buying a call option with a delta of 70. So this is an in the money call option with about 7 days to expiration. So this would be buying the call option every day that there is an expiration that has 7 days. So typically Monday, Wednesday, Friday for the most part. Now we're going to take this trade at 3:45 p.m. and we're going to use the exact DTE, but we are also allocating 5% of the portfolio. In this case, we are using a $100,000 portfolio, and we're only taking the trade if the market is trading above its 50-day SMA. So SPY has to be trading above that in order for the tester to take that trade. We've got a stop loss of 50% on the call option with a target of 100%. And so far, this is the sort of best combination we've come up with. We've tested many things. You can go back and look at the series for this, but it's made about $30,000 over the last 2 years with an average return of about 16% per year. But one of the issues that we've been having is, it did pretty well, and this is very, very choppy, which is, part of trading short-term options like this. You get very, very choppy results, but ultimately was doing pretty well. But the bear market really kind of took a lot of the profits out. You can see here at one point the account was up to $150,000, $160,000, and then it just gave back most of those gains. So this is going to be a very painful strategy. Now, in the comments of one of the videos, there was a suggestion to use a shorter term moving average combination. They wanted to try the 3 SMA above the 5 SMA. And this is actually very similar to my free call option course. And by the way, if you're interested in taking this course, it's actually a little bit more profitable and it uses farther out of date options. But if you go over to stockmarketoptionstrading.net and go to courses, you'll find the SPY call option strategy here. This is a free course, and I'm actually about to update this for 2022 with bear market information, but you can see it's a nice little video course. So if you're interested in that, head on over to stockmarketoptionstrading.net and take that free course. But in this video, we're going to test the same strategy, but we're going to change the moving average combinations. We're going to come in here, and under the technical indicators, instead of above SMA, we're going to compare two SMAs. So we're going to do they wanted to test the 3 SMA above the 5 SMA. So let's run that and let's just see how that did. So here are the results, and we made a little bit less money, but it wasn't a complete disaster, although the general trend of the P&L curve is actually kind of down. Now this 3 above 5 strategy is very similar to the one in the course, but the main difference is we're looking at 30-day options instead of 7-day options, and you actually get a much better win rate and much better return. So be sure to check out that free course again over at stockmarketoptionstrading.net and go to the courses, and you'll see that strategy there for you. Thanks for watching, and we'll see you in the next video.